Hello everyone, welcome, thanks for joining us today, and welcome to the first of the series of interactive webinars hosted by the Helicopter Association International Finance and Leasing Committee. These webinars that we're hosting are aimed at operators, bankers, lessors, and other people involved with the helicopter industry at all levels of experience. In these webinars, we will have experienced panelists from across many segments of the helicopter industry. We will get updates on the market and values. There will be focus talks on topics that matter to you. We will provide guidance on securing finance at least for your helicopters, and we will also give chance to OEMs to update us on the market and highlight opportunities for operators, lessors, and bankers. So these sessions will be broadcasted on quarterly basis, and we will make the recordings available on the HAI website. Don't forget to interact with the panelists, ask questions, and obtain advice. You can post your question in the window that's on your right, which says chat. So there's a down arrow which you can click on. And what I will be doing is I will selecting those questions throughout the session. So we will give 15 minutes towards the end for this. And please start your question with the name of the panelist so they know it's addressed to them. Undoubtedly, there will be questions left unanswered, which we will pass on to the panelists, and we will post replies online on the HAI webinar page, which will be the link to that will be shared with the members after the webinar. So sit back and relax, and we hope that you find the webinar educational. With that, I move on to our panelists for today. We have Sharon Desford and Paul Sykes. Sharon Sharon is a president of HAI Values, a very well-known helicopter appraisal firm and publisher of the official Helicopter Blue Book. Sharon is an accredited senior appraiser of the ASA, currently serving as the American Society of Appraisers International Vice President. She has previously served on various boards and committees and currently serves as advisor to HAI Finance and Leasing Committee. We also have Paul Sykes following Sharon's market update. Paul is a senior manager at HAI Finance Company overseeing credit and helicopter business development. Paul's previous experience includes risk and lease management at GE Capital and aviation finance at RBS Aviation Capital. So with that, I will pass on to Sharon. One suggestion to all attendees is if I can request all of you to mute your mics. So there's a green button just under the audio window panel on your right. So you should be able to see a green mic logo. If you click on that, you can mute your mic. And we will give you some chance to speak maybe towards the end. So over to you, Sharon.
Thank you, Usman, and thank you even more for dragging us finally into the 20th century. Perhaps someday we'll get to the 21st. But yeah, this is fabulous, our quarterly webinar series. It only took us a decade to get here, but we're finally here for you guys. We really want to educate you on what's going on. And so my assignment really was to give kind of a State of the Union address to start the year off. You know, how did we finish last year and what are we looking into going into next year? So the state of the helicopter market. As of today, I would still call the market bleak, but finally it's the kind of bleak that you're getting at the end of the winter. You know spring is coming. You can see it around the corner. We just don't know how many false starts we're going to have, and it really kind of seems far away still. There are several contributing factors to that. I mean, really 2016 was a pretty terrible year. for us in the helicopter industry. The Tromsø accident, immediately followed by the CHC bankruptcy declaration. I mean, we all knew it was coming. We waited for it for a long time, but it really did put a crimp in the wallets of most helicopter finance companies. And we all know that money makes the world go round. If we can't get money, then we can't do the deals, and without deals, then the prices fall. And then, of course, there's the price of oil, and it has been quite a ride over 2016. You know, we finally stabilized in the last quarter around $50 a barrel, which is not as bad as last January's $30, but that's really not enough to offer people profit. So let's look at those two contributing factors right now. Clearly, the accident had an impact on the helicopter market. And then CHC declared bankruptcy within a week afterward. And they understood that they had no hope of utilizing the 225s and possibly even the older Super Pumas as well. It really, the accident, the grounding really shaped how they were going to restructure and has been shaping it all along. So the impact of the investigation of this accident has happened to both values and marketability of the 225 and the 332L2. And that impact has just continued to worsen as time passes. We won't really know how this is all going to pan out until the final AIBN report is completed and circulated to everyone and we know. I mean, we've got some pretty good ideas right now of what went on, but acceptability of this model back into the oil industry is just going to be a wait and see thing. And then CHC's bankruptcy has been affecting all models in their fleet. I don't want to say flooding the market, but they have certainly dispersed helicopters, and that has definitely had an impact on what was already an oversupply of helicopters for sale in the helicopter market. So now we have even more excess capacity in heavy and medium OGP machines. You know, more supply, less demand equals lower prices. There is a bright spot. Operators, because of the accident, have had to pick up the slack with AW139s and S76s and S92s. Because, you know, there really aren't enough S92s to go around, and there just aren't enough super mediums in the world quite yet. So if the accident hadn't happened, we might actually be in worse condition than we are right now, because some of that excess supply has been sucked up and gone back into operations. Of course, oil plays an enormous role in the helicopter industry. Whether you're doing offshore oil support with your operation or doing emergency medical services, if you are doing sightseeing or anything else, the whole market really does rise and fall with oil, regardless of whether that makes sense or not. So a year ago in January, everybody was worried about $30 a barrel oil and the imminent increase in Iranian oil production after the sanctions were lifted. But in December, we finally saw the first proposed production cut by OPEC in 8 years. And what's more, it was the first deal that included non-OPEC producers in 15 years. So let's look at the International Energy Agency. They do charts periodically, and this one interested me because it's just about a week old right now. And here you can see 3 straight years of supply or production, which is greater than demand, and demand is the pink line here. And then the cumulative total stock, you know, in terms of barrels per day, is this gray bar. All right, so through December of 16, we were really still looking at production exceeding supply in amounts that have kept prices low. So before November's OPEC agreement, the International Energy Agency's demand and supply numbers were suggesting that the market wouldn't rebalance until the end of 2017. But OPEC and Russia and the other producers weren't satisfied with that, and they wanted to speed up the process. So now really, if OPEC promptly and fully sticks to its production target, which is right now at 32.7 million barrels a day. And if the non-OPEC producers delivered their agreed cuts of 550 some thousand barrels a day, according to the December 10th agreement, then the market is really likely to drop production below supply in the first half of 2017 by something like 600,000 barrels a day. So the International Energy Agency is emphasizing this chart here is not their official forecast. This chart is an assumption that's based on the numbers in OPEC's November 30th agreement, and it also assumes that the limitations are actually reinforced by the non-OPEC producers as well. That's the good news. The maybe news is that the proposed cut is right now for 6 months, and it will be reviewed at the next OPEC meeting, which is the end of May this year. That means that this month, January, and next month, February, are going to be crucial in determining, first of all, if the production cuts are actually being implemented, and second, whether the recent increase in oil prices is even going to last. A successful production cut that sticks around for a while should mean the reinforcement of these 56-ish dollar a barrel oil prices and some revenue stability finally for producers after the last couple of excruciatingly painful years. But failing in this agreement could risk starting a fourth consecutive year of overproduction and a possible return to lower prices. Here's the bad news. This is Monday from oilprice.com. Iraq is already having problems with these cuts. Kurdistan is flatly refusing to abide by the agreement. It's already producing more than its allotment. 2 weeks ago, on December 26, Dilshad Shaban, who is in the Kurdistan parliament as deputy head of energy and natural resources, said, and I quote, "The Kurdistan region will continue its oil exports as before and has not decided to abide by the OPEC accord to reduce its exportation of oil," end quote. So oilprice.com went to Wood Mackenzie, who's an energy consultancy, and talked to Jessica Brewer, one of their analysts. She says that the oil contracts used in Iraq actually include a provision that requires the government to compensate international oil companies when production is cut for reasons beyond the control of the driller. Government-imposed production cuts could actually trigger those provisions, which then puts Iraq in a difficult financial position because they have both greater production cuts than they anticipated to make up for that Kurdish overproduction, and also paying possible compensation to the international oil companies on top of that. So that's the potentially bad news. All right, so given the usual effect of oil prices on the helicopter market, what's happening right now? Well, certainly nothing is going up in value yet, even though oil prices have come up a little over 10%. Some of the models with less versatility, more specific markets, a little less popularity, they're all still falling as of the end of the last quarter, as are the S76s, even the more current ones. And I'm not really sure on why, other than oversupply on the market. So I put down some specifics here according to our last pricing meeting. The EC120 and AS355 F2 are each down about 25,000. The Bell 412 EP is down about 400,000 in the last quarter. 109 SP is down about 200,000 in the last quarter. And the S76 C Plus and C++ have fallen quite a lot. The C Plus is down $750,000 in a quarter. I mean, it was sitting on the cusp of falling, and that X has finally fallen, and it really took a big deep drop in the last quarter. And the C++ is also down $500,000 in some cases, and more than that in others. So I thought it would be interesting to look at year-over-year helicopter price changes from last January till this January and see who are the winners and losers in this. Well, it turns out there aren't any winners. If you're lucky, you had zero change in your helicopter's value, but there were a lot of models that have lost value in the last year. The Super Pumas were, probably not a surprise. We're looking at $3 million for the older models. You know, they've already been supplanted by the 332L2 and then the EC225 or H225. So they were already coming down, and they've just continued to fall. You know, a year ago, you could, if you wanted an old L2 or an old 332L model, you'd probably pay somewhere in the neighborhood of $5 million for it, $4.5 million. You could probably pick one up today for $1.5 million. The L1s have fallen a similar amount of money, although they're a little more expensive machine, so that means a smaller decrease in value, but still losing half their value in a quarter is a pretty steep and significant drop. And then as we go down the line, you can see others as well. The original Leonardo 119, I'm not looking at the KX and the KE because they really haven't started a lot of resale activity yet. But the older models have fallen $500,000, and that might be because of the KE and the KX being more popular right now and the better rotor system. The Airbus 350B2 has had an enormous oversupply in the last couple of years, and that one has just been falling steadily over the last year or two. 76C Plus, you know, once it was supplanted by the C++, started to lose a little bit in value, but it's really starting to fall now that the D is out. The old 109C, 109E have lost in value because they've also been supplanted. So we're seeing a pattern here that machines that have several variants that are currently in production, currently have resale markets, those old variants are really losing value a lot faster than the newer ones are. Then you get some of the really, really old machines, 214ST, the 365N1. They've each lost 30% of their value. It's not like there are a lot of trades, but the few that occur in these models really do indicate significant losses of value over the last quarter and the last year. I mentioned the C++ previously, but you'll notice here that the Ericsson 64E and F have both lost value in the amount of about a quarter of their value. And that actually is not due to resales because they don't trade very often in any year, and they certainly haven't traded recently. But the fire season this past year and the contracts that went out with that showed that the 64 was less popular, that it was being kind of overrun by the introduction of the UH-60s into that fire support market. And the contracts that did come out were at lesser number of hours and lesser dollars, which means that they're producing less income. So you can do an income approach valuation on a helicopter, and we found that these models have lost a quarter of their value this year. The EC145T1 has lost value. It went down farther than that. It went up a little, and then it kind of flattened back out again. So there's a little volatility there, not a lot, still mostly downward pressure. The 135 T2 and P2 are losing somewhere in the neighborhood of 17 to 20% of their value. I think, again, we're looking at oversupply more than anything else. The old 355 F1, F2s, those have all lost value also. And as we go down the line, you can just see that most of the rest of these are older models, by and large, 76As, 206L3s. So really we're looking at a decline in value due to replacement by newer models. You'll see second from the bottom is the S92 that lost about $500,000 in value. That was a temporary dip, and we actually just had a meeting last week, and we're going to get rid of that. It was just a little flattening in the market 2 quarters ago, so that's kind of come back right now. So then, after talking about that, I got kind of curious. I said, well, what's happened in the last 10-year period? And then after I did my charts, I realized that I actually was looking at 2006 prices instead of 2007. So rather than redoing the charts, now I'm going to talk about 11 years instead because I was too lazy to go back and do it again. All right, I divided it into winners and losers, and that's strictly which have gained value and which have lost in value over the last 11-year period. And then I thought about it afterward and went, well, that's not really correct because I didn't account for inflation. So then I went back, and you can see at the bottom I put in the U.S., because I could track that quickly, the cumulative inflation since 2006 has been just under 18%, the entire 11-year period. So really on this chart, anything under 18% has lost value. Anything that gained 18% has stayed flat. So really only from the ends from 480 down do you see actual increases in value. And I thought that it was kind of intriguing when you go way down to the bottom and start looking at some of these old machines that have, doubled, tripled in value in the last 11 years and how old they really are. I was trying to figure out what does this mean? And as I looked at the models, I thought, well, it's not actually due to that model itself. It really, in most cases, other than maybe the K-Max, you're looking at things that have been driven up in value because the nearest competitive models have also gone up in value. So a 500C that was worth, $100,000 11 years ago is now worth $260,000. It's not because there's a driving demand for the old 500Cs. It's because they're competing with the 500Ds, they're competing with the 206 B2s and B3s, and you can't get competitive models for much under $250,000. You just can't. So therefore, these models have been dragged up in the market because of pricing pressure from the nearest competing models. I thought that was kind of an interesting way of looking at it, that the older a model gets, the more value it loses up to a point. And then after it's out of production, then you start to see increases in value because of the upward drive in current production but competitive models. So that was strange and interesting, and I really thought it was rather fascinating. The losers, and in this case I'm talking about anything that lost value cumulatively over 11 years. And a lot of these, if you look at the biggest losers in value over that time period, they're old models. They've fallen out of value. They've fallen out of favor. People don't choose them first for anything anymore. Look at the 222U. When was the last time you heard of somebody who wanted to go out and specifically buy a 222U? I mean, they might pick one up for super cheap if they need a backup machine for some reason, but I mean, they're buying it because it's cheap, not because they want a 222. So again, the surprises in here were the S76s. I really didn't expect to see them fall in value quite that much, quite that quickly. The 76C Plus has lost half of its value in the last decade, which is a very quick depreciation. So that's my kind of view of what has been going on and what we have seen actually over the last year and over the last 10 years, 11 years. So if anyone has any questions, would you please type them into the chat box, and Usman, if you can see them, let me know. All right, what I'm going to do here is I'm going to transfer presentation mode over to Paul for his portion of the morning or afternoon or middle of the night if you're calling in from the Asia Pacific region, which means if you'll give me a moment, I've only done this transfer once, so it could take, oh, where'd you go? Make presenter. Yes. All right, Paul, You should have the screen, and it is over to you. Go ahead and share your screen, and you're up.
I can see it. I think I've got it now, Sharon. Can you see my screen?
Yep, you're clear, Paul. Go ahead.
Okay, great. Well, hi everybody. Thanks for joining today, and thanks Usman for the introduction at the start there. As you mentioned, my experience is predominantly through my time with RBS, which was working in both the commercial aviation, corporate jet and helicopter world. I actually moved to CHC, who of course were the subject of much of Sharon's discussion, and I was there for 3 years managing their lease portfolio and helping them finance their aircraft as they acquired them over that period. And I subsequently have spent time with GE Capital, also managing a portfolio including helicopters and business jets. And I'm now with Air Finance, who we specialise in financing export credit aircraft, and I'll talk a little bit more about that in a second. But my role really is in charge of helicopter business development, and I also occasionally do some credit work as well, which is, for those of you that don't know, just really putting together transactions and seeking approval for transactions based on the strengths of the of the possible structure, asset, customer, etc., and getting deals done. So quite a broad experience of how deals happen, how financing comes to light, and what I'm going to do today is just talk through some of the sources that you can get financing from. I've got a couple of slides I'll walk you through. At the end, I haven't really got a slide for it, but I thought I'd just talk about some of the key things that we look for, or that the various types of financiers look for, to try and help you get a sort of insight into how we think and how we process transactions and where we see strengths and weaknesses, that kind of thing. So just to start with, I'm putting myself in the shoes of a potential purchaser here. I'm looking to buy an aircraft. I decide I'm going to require, or I prefer to get financing for it, and where do I go? Where's my first port of call to find a funding solution? One of those starting points would be inevitably a local bank, your own bank, the group that provides you with overdrafts, with loans, with working capital facilities maybe. I realise that you guys are online from all over the world here, and sometimes your smaller banks will be very capable of lending against aircraft. In some of the more, let's just say, remote jurisdictions, or less sophisticated kind of financial jurisdictions, and that often isn't the case. What I see in the market occasionally are local banks that have very strong relationships with customers and don't want their customers going anywhere else for a funding solution. So quite often what you'll find is a local bank will provide a facility or a secured facility to a customer because they don't want their business to go somewhere else and potentially lose them to a larger bank or an international bank that can provide them with alternative solutions. What we find is they're typically debt products. So when I say debt, I probably, for those of you who don't know the difference between a debt and lease product, a debt product is effectively a loan where title to the assets stays with you as the purchaser, and you pay down effectively a loan to zero. Now that could be in even sums over the course of the term of the transaction, or it could be in smaller sums and then with a larger balloon commitment at the end, which is obviously a large payment to take the loan to zero, but the title sits with you. In an operating lease solution, that is what we call an off-balance sheet solution, where you don't have title to the aircraft, you don't own the aircraft, but you pay a lessor a set fee per month or per quarter, normally per month to be honest, and at the end of the term, you might occasionally have a purchase option at the end, which is normally pre-agreed, but normally you would give the aircraft back to that leasing company with certain requirements being met, what we call return conditions being met. As I said, typically debt products from local banks, and they don't really always, well, it's unlikely that they have asset specialised groups. Normally it would be a relationship group that you deal with, but quite often we see those deals happening in the market. The second group of institutions that you would see in the market would be the international banks. We see many of these groups around who have very specialised teams with asset specialists. They are out there looking actively for transactions to do. They do tend to lend to the larger operators, as we've seen, and individuals with higher net worth. They can be quite aggressive with rates, and quite often they can be offering a multitude of solutions with leases and loans. I think it's probably fair to say that a lot of them have pulled away from that lease model. There's probably people that would disagree with me on this call, but obviously with the information we've seen from Sharon and some of the deteriorating assets, a lot of banks will prefer to stay away from lease structures and stick to loan structures for customers they want to do business with. Interestingly, a lot of the international banks are now involved with leasing companies as well. So as many of you know, we have specialist leasing companies in the market. I'll talk about them a bit more in a second, but a lot of them are providing financial support and facilities to them. One of the reasons for that is if you lend to a leasing company, you would have a risk on that leasing company and its overall portfolio, as opposed to on a transaction basis. For instance, if you were a bank that lent to CHC and CHC went into Chapter 11 bankruptcy protection, you have a direct exposure to CHC. If you lend to a leasing company and they have a percentage of exposure to CHC, you're not as exposed. So there's been some shifts to to the market in recent years as to how that's worked, and I'm sure that will change as the market hopefully picks up again soon. I mean, examples I can think of off the top of my head are the likes of Lombard in the UK, Macquarie obviously in Australia, who I know do for lease products as well occasionally. I think they're still active, and the likes of Investec down in South Africa. And really, these are groups that are active in this sector, and like I said before, going out trying to find deals as well. The next one down, I've just, I mean, most of you in the market will probably know the guys who are the leasing companies who are out there now. We have obviously Lobo, owned by Blackstone. We've got LCI, who are owned by the Libra Group. Milestone, who were successfully bought out by GCAS probably a couple of years ago now. I think time flies. And of course Waypoint Leasing as well, who are owned by I think three equity groups: MSD, Soros, and Charleston Capital. And these guys have all got they're all in the market of leasing, but they all have slightly different business models and compete in different areas with each other. As I said before, the difference with leases and loans is obviously the leasing is an off-balance sheet solution. These guys have probably been a bit more aggressive in some of the more remote jurisdictions. It's probably fair to say that the international banks, unless it's a local customer or someone they know, they're less open to operating in places a little bit outside of their comfort zone. The majority of the groups that we would see would be US institutions, we'd see European institutions, and obviously there are some down in Asia Pac, but I would say less so than in places like Europe. But the leasing companies, because of what's happened in recent years, they're still very open to business as far as I'm aware. I know for a fact that we're seeing a lot of activity from them. Nobody's shut for business at all, and they are becoming increasingly aggressive in terms of the rates that they offer, and also the jurisdictions that they operate in. One of the quirks of being a leasing company is, of course, you are the group that takes the asset risk. So if you're an operator and you don't necessarily have an urge to own your aircraft, it's not always a bad thing to transfer that risk onto a leasing company. You get the stability of regular repayments for a set period of time, and you give the aircraft back to the leasing company at the end. So if it's worth more than they thought it was going to be worth, they take the upside, If they sell the aircraft, they can obviously book an upside on that sale, and obviously, as we've probably seen a lot more in recent years, they take the risk of the downside. So the aircraft goes back. If they sell it, they might take a loss on their actual residual position. I think the reality, and people can correct me if I'm wrong, but a lot of these leasing companies, they have assets. The assets come back, and they actively remarket them before they return. So once they come back, they will be looking to put them out on contract with other operators or corporates, and that's the way their business model seems to work. There's nothing worse than taking an aircraft back and having it sitting parked in a hangar for a couple of months, with you obviously incurring all the costs of storage, maintenance, etc. So they're an interesting group, and like I say, very active. If you are looking for funding, whilst the local banks and the international banks will probably be open for some sort of business with most of you, the leasing companies are probably going to be the ones who are most aggressively marketing themselves and putting themselves out there for deals. So the last two I've got here, export credit agencies. I mentioned briefly that I work for HAI Finance, and we actually work with export credit agencies. What these are arms of governments who are in place to support the export of their products. So you can imagine if you are building, let's say, an Augusta, I've got to stop saying that, a Leonardo 139 built in Philadelphia. That is every time one of those aircraft gets sold, it creates American jobs. And US Exim Bank, who I actually work with, they are very, very supportive of US exports. So basically, if a customer comes to us and says, we really want to buy that AW139, but we can't get anybody to finance it for us, export credit agencies will be a great source of funding for you, because they will be very aggressive with the jurisdictions that they operate in. They're very much credit lenders. You will get a debt solution. You won't be able to get an operating lease from them, but they'll be they're very sophisticated in terms of understanding credits and structuring deals that work, and I actually work closely with them on that. And they will help manufacturers and buyers get through the sales process and put a structure in place that will help the sale take place. Examples of the active export credit agencies would be US Exim Bank, who of course would support the Leonardo 139 and also other US built aircraft. Obviously Sikorsky as well. We would have Canada, so Export Development Canada, who support most aircraft with a Pratt & Whitney engine in them. So the Augusta, in fact, as well, the 139 is one which is eligible for that support. SACE in Italy also will support the Italian-built Leonardo helicopters, and of course COFAS in France will do the Airbus aircraft. Hermes in Germany, which actually I've realised is not on the list there, will also support the Airbus aircraft, because of course some of those are built in Germany. And I've included Switzerland there. We do have obviously the Marenco Swiss helicopter, which is going to be launched over the next couple of years, which will be eligible for their support as well. So these are groups that not to be forgotten about if you can't get funding from other sources, and certainly worth asking the question. And I'd be happy to provide introductions as required if you are struggling to get funding from other sources. I've included private equity and investment funds. This is something really that is probably, I think the last time I did this presentation it was before HAI 2015, and there were groups in the market who were actively out there looking for transactions. They were looking to build funds and manage portfolios of helicopter assets, because they saw a lot of opportunities here. I think it's probably fair to say that the private equity market has moved in more so into supporting the leasing companies, and some of them sadly have pulled out altogether. But I thought it's worth mentioning, because you may occasionally come across them in the market, and they would typically be looking to do higher return transactions, and they would be relatively sort of aggressive with pricing, I would say. Yeah, just so that's really the sort of the main sources. I just wanted to mention as well something which we announced recently, HAI Finance. It's a bit of a plug, I think, here, but I just wanted to raise this with you all. We've created the first ever financing digital marketplace. So obviously, it's very hard to know what your best sources are in terms of where you get financing. You know, when you first decide to purchase an aircraft, where do you go? Do you ask the manufacturer? Do you ask your broker? Do you ask your relationship bank? We've created a marketplace where basically you can announce your opportunity for free, absolutely no cost involved, and all of the financiers who can do your kind of deal will be contacted. So if you say you're looking for an S92 to be based in Norway, for instance, all the European financiers who are interested in that asset type in Europe would be contacted, and they basically approach you rather than you contacting them. So so that's just another alternative. You can find a good solution on there. If you're a financier, you can find solutions on there. We've had $250 million worth of business on there already, and we'd love to see you sign up if you're interested. That was really it in terms of my slides. In terms, I think, Usman, am I okay for time just to go through a few key things that we look for?
Yes, yeah. So that I was going to just remind you that we have time to. We have 5 minutes to quickly go through what are the key things finance is looking for in a deal.
Great. Okay, perfect. I will do that. And really, you know, this is, you know, I work in credit. I see deals that come across my desk, and this is really just a bit of an insight as to how we look at transactions. You know, when you're presenting yourself, it's very important, first of all, to have the right kind of due diligence information that financiers will look for. And almost always, if you're a company, that's going to be audited financial statements. We normally look for 3 years of audited financial statements, and you know, if there's any information available, like company presentations, that kind of thing, it makes our lives very easy if you come to us with all of the information that we expect to see, and it always, you know, makes life a lot easier if we're able to take a quick look at all the due diligence information, and we can give a very quick steer about whether or not it's a deal that we can or can't do. I think most financiers would probably say the same thing. You know, we all have a very set target market. You know, we can do deals above certain sizes and in certain jurisdictions, and you know, if we see a good set of financial statements, you know, we'll know quite quickly. I always think of deals from 4 perspectives. The asset itself, you know, what kind of asset, how old is it, what's the price that's been paid, what are the residual values, that kind of thing. Some financiers will look at that closer than others, quite simply because of the structure they might have in place. The structure itself is something which is very important. You know, how am I going to get paid? You know, whether it's a lease or a loan, quite often there are you know, chains of companies that are involved, special purpose vehicles that are involved. Occasionally customers will have companies set up just to own their aircraft. It's very important that it's understandable and works. You know, tax is always you know, the kind of driving force behind how a structure is set up or proposed by a customer, but ultimately the financier has to get comfortable with that and how it looks, and ultimately if things go wrong, you know, we're a pessimistic bunch, unfortunately, and we always have to think about the worst case scenario. We always have to think about what happens if everything goes wrong and I have to go and get this aircraft back. And you know, that's where we look at the structure and say, right, okay, you know, these guys are good at the moment, but what's going to happen in 5 years if they fall over? And you know, that incorporates a few things really. One of them is, you know, if you've got a loan, there's a guarantee. Where's the guarantee coming from, and what country is it in? Because you know, some countries it's very straightforward to go and exercise a guarantee. In some countries it's not so straightforward, and I can probably tell you of multiple examples of where I've had sleepless nights because of that, but I won't bore you with my tales of woe. Yeah, that's sort of the second point. Credit, obviously, as I said before, you know, looking at a customer, it's quite simple in many ways. You know, we look at the the size of the balance sheet and the cash flow of the business, and we just want to work out how and whether we're going to get paid. Is the customer generating enough cash flow to make the repayments that I'm going to be due? And what are the risks involved in that business? We look at the cyclicality of the business. We look at the the operating structure. We'd look at diversification. If the customer operates in, well, for instance, if you're a helicopter operator and you only operate in oil and gas, if the oil and gas prices go down, we know that you're going to have problems, and that's something that we have to consider. And then, of course, lastly, the jurisdiction, the country risk. Some legal jurisdictions are more open to, well, let's just say more friendly to aviation finance than others, and we have, we have to do quite a bit of due diligence before we close the deal to make sure that we're comfortable with the country and its legal system before we actually go ahead and remit funds. Just a couple of final points. I think across the board, financiers have got their own different requirements. I've probably touched on it a little bit already, but most of them will have a minimum deal size. Most of them will have particular countries they operate in, and some of them, and the majority of them, in fact, will have customer types and customer credits that they prefer to do. So one of the sort of the key things for you to understand is, if you go to a financier and they turn you down, it's not because you're a bad prospect. It's just simply a lot of banks have very specific requirements on what they can and can't do, and it's nothing personal. It's one of the things that we looked at with Flyfunder, in fact, when we were building the site, was banks have very clear ideas about what they want to do and what they can do, and that's not going to change. It's often due to the fact that they maybe have lost money in certain deals in the past, or they have preferences for some countries, or just strategically their institution's changing direction. But hopefully I've given you a bit of an understanding as to where you can get financing from and some of the key things we look for, and I look forward to hearing some of your questions.
Thanks very much, Paul. We have quite a few questions. The first one is for you, Paul, from Sharon. And Sharon is asking, do you have any feel for what percentage of helicopter transactions are self-funded? I remember a year or two ago a survey that showed nearly 30% of helicopter transactions were funded by the purchaser out of operating cash flow. What are the pros and cons of such a self-funded transaction? I hope you can also see in your chat window on the right.
Let me just see. Well, I suppose it's a good question, Sharon. The benefits, I'm gonna throw myself over the rocks here, but the benefits of not having a financier involved is the hassle of closing. If you've got the cash available and you are willing to pay in cash, you are the one probably setting the time frame around the closing as much as anything else. With a financier involved, quite often there are things that come up, whether it's legal, whether it's the payment of the wiring of cash, for instance. I've encountered multiple things at closing. I once had to close a transaction while the aircraft was over international waters, and as we came to the closing call, the pilot was on the tarmac ready to take off to go 12 nautical miles out to sea, and then the fog came in. So I've had some interesting experiences. In terms of the cons, I mean, self-funding. You're putting capital into an asset which is depreciating. Now, if you are obviously in a loan transaction, you have the risk of value anyway. And there is quite a lot of, well, there are quite a lot of groups who would argue that your cash would be better invested elsewhere rather than in your working assets. If you'd have asked me that question 5 years ago, I'd have probably had a different answer, because helicopters were, I mean, at CHC we had aircraft that were 45 years old and were still worth a couple of $1 million because they were still working. We were refinancing aircraft at 25% more than they'd been purchased for 15, 20 years earlier, which is amazing. And I think this market now is probably well, it definitely has caught up with everyone else in that sense. So it's an interesting question. Being a financier, I like the idea of spreading the cost of capital over the life of an asset. I just think it's good practice, it's good use of capital, and most of the operators that I deal with are very sensible as well. They depreciate assets as aggressively as they can to try and make sure they've got equity in their balance sheet with their assets, albeit hidden equity. But yeah, it's an interesting question because the simplicity of closing with cash is very obvious. In terms of how many are there these days as opposed to previously, do you know what? It's very interesting. I would say that probably there are, based on the amount of leads that I see in the market, and I deal with obviously Bell, Augustus, Sikorsky, Leonardo. I would say there's probably more cash purchases out there now than finance. I think CHC, are probably a lot to do with that. I mean, they financed every delivery they had while I was with the company, so that was over 3 years. That was quite a few $1 million worth of aircraft, and I think that that there's probably some truth in the fact that the number of financiers pulling out of the market has probably made it harder to get a better deal on the financing and make you more likely to buy in cash. But there's probably people out there who know a lot more than me who could argue otherwise, but it's certainly an interesting question.
Thanks very much, Paul. Staying with you, a member in the audience has asked a question. Are changes coming to the way operators report aircraft leases? For example, will they need to be reflected in the balance sheet in the near future as opposed to being off-balance sheet transactions?
Well, there have been some changes proposed to accounting for quite some time now about the way that leases are going to be represented. Whether it's going to be a present value of the outstanding lease payments. I mean, to be honest with you, the accounting, people are smart now. We know that operators and institutions have got off-balance sheet solutions, and when you read audited financial statements, they have to declare the operating leases that they have. So, is it going to change? I've been hearing for the last probably 7 or 8 years that yes, that's the case. Is it going to change a lot from a financier's perspective? I don't think so. I think it's going to be the companies themselves that have to deal with the majority of that, simply because a lot of them will have covenants in place for the amount of borrowing they can do, and it's really going to be whether or not the new classification of lease rentals are going to trigger any issues in their existing financial facilities. Putting my boot on the other foot, so thinking at it from a leasing, from a lessor's perspective, it's going to be interesting to see whether or not it affects the appetite for leases, because whilst leasing is an off-balance sheet solution, ultimately a lot of it comes down to flexibility and cash flow. If you're happy to pass the asset risk onto that leasing company, all you're thinking about really is how much you're spending. So how much you're, whether you're spending 9% of the aircraft value per year, 12% of the aircraft value per year, whatever your agreed lease rental is, and how much you're making from that asset. Are the lease rentals that are being proposed by the lessors going to be competitive with debt at that stage? I don't think it's going to make that much of a difference. I think a lot of the operators now are a little bit less sensitive to the structures that are in place, and a little bit more sensitive to cash flow. But again, I caveat that because there are probably people out there who are sitting there going, "No, I disagree with that." But that's just what I see, and having worked for CHC and having seen how desperate they were to get aircraft off balance sheet because of the covenants that they had in place, and how that story ultimately ended up. I think that lessons are being learned, and I think that it'll ultimately come down to dollars and cents rather than trying to get clever with accounting.
Thanks very much, Paul. I have a question for Sharon, and it's with regards to the S92 grounding that recently happened. How do you see in terms of how that's impacting the values of S92, or is it too soon to say anything about this, Sharon?
It's too soon. It's something that we're talking about around the office now. It's not just an impact on the S92, but will it make the 225 more palatable as the oil companies in particular start looking at, oh my goodness, we've now put all of our eggs primarily in the S92 basket. Are they going to feel compelled to return the 225 to their fleece so that they have more versatility? That's kind of the reason that we had two major heavy twins in the oil market anyway. So will it impact that? I think it's probably better news for the 225 than it is bad news for the S92.
Thanks, Sharon. And staying with that question of heavy helicopters, we haven't seen a lot in your presentation on EC225. Is that purely because there aren't any transactions out there, or because it's very difficult to give an opinion on the values whilst the helicopter isn't really trading at all? What's your view on this?
Okay, from an appraisal point of view, you're looking at a model that does not have a fair market right now. I mean, it's just not trading. Yes, the EASA ban has been lifted. Yes, the FAA ban has been lifted. And yet, you're looking at the places where it's predominantly used, Norway and the UK, and those two countries have said, well, the EASA has lifted their ban, but we have not. So the two countries that it primarily operates out of have said, no, you still can't fly them. So no one is going to make a purchase of a helicopter that they cannot operate. So the only sales at this point have been into non-federally regulated type of operations, all right? And those have been oddball sales with helicopters that were on the market for a long time, in different configurations, not OGP configuration. So they were off market, and I mean, not in terms of not being listed, but in terms of being far outside the standard market for that model. So at this point, you can't give a fair market value. We've turned the page off in the Blue Book. There's nothing you can say until the machine is operable again. So a lot of it is wait and see. I mean, there are certain places you can go and they just have to have a value for bookkeeping purposes, for financial audits, in which case, David Crick and I and some of the operating leasing companies have put together basically a new definition of value called nominal values, where you're looking at a value for book purposes that doesn't reflect a current market because there isn't a current market. So it's a lot of wait and see. I mean, Statoil said we're not going back to the 225. Are they going to change their mind with a grounding of the S92? After making a public announcement, probably not. But what does that do to the oil companies? Nobody else has made an announcement yet. So it's really up to the oil companies right now. There's not a lot of other market for the 225. A little bit, but not a lot. So let's wait. Just wait.
Thanks, Sharon. So if there are any questions in the audience, this is your time. If you would like to ask any questions, please feel free. So I'll give everyone in the audience chance to ask the question. And if not, then I have one last question for Paul. So I'll wait a few seconds. If there is anyone who'd like to jump in with a question, please feel free.
Usman, as organizer, one came through from Monica Snow. I don't know if you can see that one. Because if not, I can ask it.
No, I can't see that. So if you please feel free.
All right, this one's for Paul. Paul, please address financing for startup operators.
Oh, very good question. So, what? Okay, it's difficult. I think is a summary without any level of support from another business. Not to say there aren't groups out there who might be interested in helping. I can certainly talk from an export credit perspective. We've seen startups come to us, and basically you need to prove that the management that you have is capable of running the organisation. You would need to have, best case, a company maybe unrelated to the operator but able and willing to provide a guarantee. And really, you know, I think if you've got that, if you've got an asset and you've got a business model which stacks up, there is a chance that you'll get somebody out there that can finance it. It would be very difficult. It would be very difficult because when you're writing up a credit application, you like to be able to talk about the track record of that business, you know, the abilities of the management, strategies that have been delivered upon. And when you've got a startup, what you're talking about are things that haven't yet happened, and you have to trust in the ability of that individual and that you know, that business plan. So it's a challenge. So yeah, you know, it does make it harder. What I would say is, if you are somebody with a startup, you know, if you can get into partnership with other operators or other companies, that puts you in a much stronger position. But yeah, you know, I'd be happy to talk more if you have any more specifics that you'd like to talk about. And well, if it's a US or US or Germany, Swiss, or basically anywhere but France manufactured aircraft, I might be able to help you out with that if it's a new one that you're looking at. So I hope that helps.
Sharon, I don't know if you've noticed there is a question just being posted. I know we're overrunning, so we've overrun by 2 minutes, but I think if we can wrap it up within the next few minutes. It's regarding 139, 169, and 189. Are you able to see the question, or do you want me to read it out?
I'll need you to read it out. It didn't come on my screen.
So a few helicopter types were missing from your presentation year-on-year or quarterly analysis. What are your views on the values of popular heli types like the AW139, 169, and 189? All
right. None of them showed up because there's been no change in value. The 169 because we're not seeing any resales yet. Okay, so there's no resale market yet. 189, again, no resales, only new sales. So until something transacts, it's basically a blank slate. The 139 has been absolutely firm or stable or flat, if you prefer, in value for the last 2 years. Hasn't budged a bit, which at this point kind of makes it the highest residual value machine that's operating in multiple platforms, oil and everywhere else it's being used. It's just not losing value. It's not gaining, but it's not losing. So I guess that is good news. In a bad market, when something is not falling, I guess you call it a good performer financially.
Thanks very much, Sharon. And just the last question for Paul. Do you think that financing institutions are now more open to looking at smaller helicopters after all that, what's happened in the OGP industry? So I'm talking about light, twin, and single. Are you seeing much activity in the market?
Yeah, that's a good question. Well, actually, just quickly, I've got one from Jim DiGiovanna as well. Sorry, Jim, if I've said your name wrong as well. So maybe I'll just touch on that quickly afterwards. Yeah, I mean that market is is typically a little bit underserved, and that's simply because of the deal size. The amount of work that you have to put in financing an aircraft of any size is normally quite similar. So if I'm doing a 5 S92 deal or a 1 AW119 aircraft, it's about the same amount of work, which I know is crazy really, but it is, that's the way it is with the legal documentation and the approval processes that most of us have. Is it gonna get a bit easier? I mean, you know, we've seen. I mean, I can actually talk from experience on Fly Thunder because when we launched it, we've seen a lot of the smaller aircraft come on there, and they've been getting quite a lot of interest from financiers, particularly in the US. It's a little bit harder further afield because you get the jurisdictional complexities. I think what we've seen is some of the asset specialist lenders, so some of the guys who would have historically been looking more at you know, just the jet market, are actually taking a look at some of the smaller assets in the helicopter market as well. But yeah, it's somewhere where, you know, the financing community really does have to pull together. But I would say that your best bet if you are struggling for financing would be to speak to the export credit agents. If you're buying new. Used aircraft is even more challenging, but if you're buying a new aircraft, they are very open to you know, to doing those. I mean, you know, I actually have got transactions on the go at the moment for MD helicopters, Piper, the small you know, the small sort of fixed wing aircraft, Enstrom helicopters. So some really tiny assets compared to, you know, your S92s of this world, because they're not motivated by the returns that they're getting. They're motivated by selling aircraft and giving you know, sustaining jobs. It's a very different kind of market. So I would say the export credit world is somewhere you should be looking. And just quickly, Jim has asked, Paul, can you please address financing options available to government public safety agencies, primarily in the US? Well, Jim, it's an interesting one. Government, I'm not an expert in government public safety agencies, but the US is a very well-served market for asset finance. And again, I've seen that on the website recently, where every US deal that's come in has received attention from lenders. The challenge with public safety agencies, and I'm kind of thinking of emergency medical services, I'm thinking of you know, border patrol, that kind of stuff. It really depends on what's behind the deal, like the kind of credit. And we often see Ministry of Finance guarantees being required. So if you're a lender, you would look to you know, the Ministry of Finance, the centralised government Ministry of Finance, or if it's a charity, you would need to see the financials of that charity. If it's you know, a regionally funded organisation, you could take a look at the financials of them and have a you know, have a deep dive into, you know, where their cash flow comes from. But ultimately, I think if you are looking for a solution in the US, you'd be you know, there should be you should be well served. I'd be happy to help you with some of those discussions if you'd like to talk after the call. I'd be more than happy, because there's if you are struggling, I think there'll be quite a lot of opportunities for you to find a solution there. Hope that helps.
Thanks very much, Paul. With that, I think we will close this session. My apologies that we overran by 7 to 8 minutes, but I thought that those questions were very important. Thank you to both of our panelists, Sharon and Paul, and thank you all of you for joining us today. And we hope to bring you another webinar around mid to end of April. And we hope that today's webinar has been informative and educational for all of you. If you still have questions, if you have any requests, if you have any issues or anything that you'd like to discuss or need advice on, feel free to reach out to the two panelists that were presenting today or myself. My email address was in the webinar email that was sent out from HAI. And we'll try and help you with putting you in touch with the right people within the Finance and Leasing Committee or the finance and leasing industry. So thank you all again, and with that we close the session. Thanks very much.
Thank you, Usman.
Thanks, guys. Take care.
Bye.